And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, top-down analysis style, looking at the charts, the news, the economic data, anything relevant and interesting that we find in the marketplace that day, and break it all down, give you guys some analysis. Welcome back. Hashtag Team Tackle right in the chat. Excited to start the week here, Monday, 6/28/2021. And Monday shows are always a lot of fun for me. We got a full panel of coaches here. We got Coach Matt, Coach Mark, and Coach Gino to take a look at this markets from a top-down perspective. We'll dive into the sectors and their rankings here today. Some interesting performance over the last couple of weeks. Take a look at some of those adjusted rankings and how they're doing, and kind of give you a preview of the overall economic calendar for the week as well. Let's bring the coaches right in here and start the show. Coach Matt, first off, how you doing, sir?
Doing absolutely fantastic. Excited to be here and excited to hang out with the crew today.
And Coach Gino, welcome back to our show on a Monday here. How you doing, bud?
Pretty good. How you doing, Tim?
Doing great, man. Excited to kind of analyze these markets, take a peek at what's happening out there, and talk sectors with you here in just a minute. And pleasantries first there, Marky. How you doing, sir?
My cats are fighting, but aside from that, I'm doing great.
I didn't know you had multiple cats.
I do.
See, that's news for me. That's news.
And they're fighting.
I knew you had
Did
one
your cats
cat.
claw your face?
No, they're fighting with each other. And just right before, as the halftime report is starting, they all of a sudden decide to go all drone strike on each other. So...
Okay.
I've not owned cats in a long time, but I can only imagine that scene there. Let's get started here, Maddie. Let's take a look at what's going on in the market. Let's start with the broad markets themselves. Obviously, here we are, S&P 500, approaching a new all-time high. In fact, it hit there on the intraday, but we've got a very light range candlestick here today. A little bit of differences, obviously, as we go into the different indexes and the sectors, but let's start just with the S&P here. What are you seeing in the chart?
Narrow low range candle, no doubt about that. But it's a fascinating low range candle, given the fact that the market itself, when you look at the broad market right here, I mean, it's down 0.6%, 0.06%. It's literally doing nothing. You go to the, Russell 2000 down a little bit more. Having resistance hold there. The Dow Jones down a little bit more. The NASDAQ up quite a bit. Right. So when you're looking at the S&P, which is kind of the collection of all of them, right, it's literally doing nothing. But when you look at the other indexes, and specifically when you look at the sectors, you'll see a vastly different picture there. And that picture is what we've been detailing in terms of sector rotation over the course of the last few weeks, but specifically last week. And remember what I said specifically on Friday. I was a little bit critical of the media on Friday because they kept reporting, oh my goodness, cyclical is back up 2, 3, 4, 5%. And remember what I said, guys, this is a little bit of a misread here, given the fact that the only thing you're seeing is what was expected to be done in the industrial sector and form a little bit of a bearish retracement. And so what you're seeing in the broad markets is you're seeing a little bit of nothing in the S&P, but when you go right on down into those sectors, and the other indexes kind of give you a little bit of that as well, because when you're looking at the NASDAQ, obviously you're going to be talking about growth stocks in the NASDAQ. When you're looking at the Russell 2000, you're going to be talking about small and mid cap stocks that are cyclical based, very sensitive to economic activity and so on and so forth. When you look at the Dow Jones, you're still going to be having that, cyclical type areas of the market, finance, energy specifically, consumer discretionary in there as well, a little bit. But when you're looking at the S&P, again, this is the broadest collection of all of them. And so when you're looking at the S&P, really nothing here. When you're looking at the other indexes and when you're really looking at these sectors, you're really seeing the continuation of what we've started identifying from about 3 weeks ago now, is that sector rotation going out of cyclical, which has been so strong, back into discretionary, back into tech, and a little bit coming into comms and some of those other growth areas of the market. And so on a doji Monday in the S&P, you're still seeing the fireworks underneath the broad market, and you're seeing that rotation continue. And remember, every major news story we've had in the last couple weeks We've seen that rotation, right? Coming out of cyclical into growth. We're seeing it. We're seeing it again. And the only question, as I proposed last week, the only question I have is how long can this last? Because I'm not sure I believe in it fundamentally, like I did the cyclical type movement. But you can't discount what you're seeing with your very eyes. Look at basic materials, bearish retracement, having a difficult time. Look at energy, look at industrials, look at finance. You'll see a very similar picture, some weaker than others, but you'll see a very similar picture. When you take a look at the growth areas, you're seeing a healthy, fairly momentum-based trend coming into resistance. Obviously, you expect a little bit of consolidation as you get into that resistance, but you got to appreciate the backdrop of the breakout last week, the higher high last week, and now what's going to happen is the creation of a higher low. You gotta love what you're seeing in technology following the breakout and the continuation earlier, the breakout last week, and obviously the continuation here today. So doji in the broad market, fireworks in the rest of the market. This stock pickers market, the rotation is continuing.
One of the themes that started last week was this concept of infrastructure. Obviously, that bipartisan group did announce that they had come to terms on a deal. Then on Friday, when we were going through the detail of the infrastructure package, Matt, we were kind of talking about, roads and bridges and how much money was going to be allocated in different areas. There was this underlying kind of thought in the market that maybe Biden would veto a bill. In fact, I think he had said something about that. But then he backtracked on that, clarified, said, no, I'm not going to veto a bill if it is passed by a bipartisan way. So.
And he didn't say he would veto the bill last week. He just hinted that he doesn't want to move forward without both bills, and nothing changed since then. But he did come out and clarify his comments, which I think when there's confusion around something as important as infrastructure or healthcare or any political issue for that matter that might have an impact on the marketplace, transparency and clarity is very important. And so I do appreciate Biden coming out over the weekend and saying, hey guys, I'm not going to veto a bipartisan bill that was negotiated by the Republican and the Democratic senators, that they worked out their issues. They're sending it to my desk. I'm going to do my job. So I appreciate Biden coming out and clarifying those comments, because he should support a bipartisan negotiated bill that went through that went through that type of difficult process. So I'm glad he clarified the comments. But even with those clarification of comments, we didn't see infrastructure bounce. We didn't see the cyclical areas of the market bounce.
No.
It should give you a little bit more belief in the short-term rotation we're seeing back into tech and the growth areas.
Let's bring Mark in here next. And Mark, let's just talk big picture here for a minute. What is your read on the broad market conditions? Obviously, tech having a nice little stretch here, breaking out in continuing its trend from last week. S&P 500 trading near all-time highs, but underperformance in some areas and weakness in charts in some areas. What's your read on the broad markets here, Marky?
Well, listen, I don't trust the Delta price action at all. I don't know if I even trust the cash flow action. But I trust it all more than I trust my electric shaver, which is why I don't have video today. Things didn't go well while I was shaving yesterday, so I apologize for not having video. But there's no way I'm letting you see my face. I'm sorry, not happening.
For a man who's worn a beard for a decade, 2 decades, I'm sure it's traumatic.
I've had facial hair of some form
right.
for 25 years, and I don't today, so it's just not happening. So I apologize for that. But listen, the price action, and Matt's been spot on it over the last couple of weeks with an attempt of a rotation into tech, right? Now, I don't trust the theme behind it at all, but you can't ignore the chart. You can't ignore the price action. And it's been something I've talked on the Sunday night prep class with members for, going back a month now, that the sentiment in the rotation into value trade, which was so amazing after the election, right? It treated us well, made us money. It was a great, easy theme. It was a powerful theme. Based on vaccine, reopening, rotation into value. It was a great trade for 6 months. But the sentiment behind that trade started to wane, in my opinion, 4 or 5 weeks ago. And I started sharing that opinion on the Sunday night prep class. And then the technicals and the obvious price movement over the last couple of weeks, Matt's nailed that, and there it has been this desire to rotate somewhere. And when I've brought up my skepticism to you, Tim, you says, well, money's got to go somewhere. And that makes sense to me in the attempt. Now, its longevity, I don't know. But last week, I think it was on Tuesday when we were talking about the technicals, I was like, listen, short-term traders, that's where the strength is. That's where the strength is. That's where the technicals are. That's where there aren't resistance levels. And it's a funny thing about technical analysis, because you're seeing a lot of strength today in growth areas, not just traditional tech like we see in XLK, but you're seeing it in Kathy Wood's popular ETF, ARKK. You're seeing it in a lot of the underbelly high volatility stocks that I like to trade. You're seeing it in solar. You're seeing it in a lot of things that identify with growth, disruption, and you're seeing strong. And it's not a coincidence that those were the charts, I believe, that had the best technicals, right? That didn't have short-term resistance levels, that didn't have to fight through moving averages, that had clear selling from a technical area. And so, you can read sentiment all you want, and we try to do our best job, and we do a pretty darn good job at tackle trading at that. But the plain and simple fact is heading into last week and heading into today, what charts had room to run? Well, you had technology that didn't have resistance levels. You had Kathy Wood, growth, disruption, solar. All of those had pretty charts. It shouldn't shock us that over the last week and coming into today, that the charts with the prettiest charts and the least resistance are having good day. That's technical analysis and short-term momentum. Now, once again, I question the longevity of that, but just like last week, that's where the short-term price action is for traders.
Yeah, and I appreciate all that analysis. I heard you clearly, mostly Marky, but I'm getting a little bit of an echo from Mark's mic. I'm not sure where that is. See if you can identify it, Mark. Maddie, let's bring you back in here. You talked about this tech, and you even highlighted that breakout last week. This is an extension of it. I do have a question on the tech chart, if we can, though, on the cues for you. How do you read the conditions when you're just trending so strongly, but you feel a little bit range up? I mean, we've been going up now for a month now, Matt. Do you feel like maybe this is a little overbought? Do you see any kind of indications like that in the RSI, anything that makes you worried about this move?
Well, yeah, I mean, it is overbought a little bit in the short term, and that is a little bit concerning in the short term, but I don't think you're to the point of overbought where you're like, no, I'm not making a trade if I see a trade. I mean, technically, this market, when it comes to the rotation, the last sector rotation that we identified was the massive sector rotation we saw in November following the election into the cyclical areas from those pandemic driven, technology type communication type plays. So, and that lasted for about good 6.5, 7 months is what that lasted for. When you're looking at what's happening in technology, there was a fundamental and behavior and political backdrop to the cyclical argument. Now, I may not have laid that completely out in the halftime report, but that there was that fundamental and economic backdrop that we talked about over time. There isn't, in my opinion, a fundamental argument for the tech rotation right now. And so I have a hard time believing in a longer term to the same degree that I did say the cyclical type rotation we saw in November and December. I see this very technically right now from a market perspective. And so it's not that I'm discounting fundamentals in my analysis. It's not that I'm discounting economics or political moments or anything like that. It's just that I feel this market is confused right now. I really do. And I've said that multiple times in the last couple of weeks. I feel they're a little confused given the fact that the Fed has not been transparent on exactly what they're doing with monetary policy. We're still going through an economic recovery scenario that shut down our economy, and we're now just getting back out there into the real world. And so I do think the market is a little confused right now from a longer term perspective, and I feel they're treating it technically as well. And so when moments in time where it gets where it's cloudy, it's not clear, it's confusing, where you have mixed analysis from a fundamental behavior or economic perspective, man, technical analysis just makes things a heck of a lot easier, in my opinion. And so when you're asking the question, are you overextended from a technical perspective? The answer is yes, in the immediate short term. When you're looking, whenever you're 5 days into a breakout, you got to ask yourself that question, right, Tim? You got, like, you just have to, right?
It's
Because
instinct.
well, markets don't go up, typically 10, 15, 20 days in a row without some type of pattern resetting itself, whether that's a high base or whether that's some type of bullish retracement or flag-based pattern where the short-term traders are locking in profit, because what's driving this short-term price action isn't long-term investors, in my opinion, and it very rarely is the long-term investors. It's the short-term traders, it's the swing traders, it's the day traders, it's the people that actually do something on a daily basis, like buy and sell things, and that's typically short-term algorithms, stuff like that. And so when moments in time like today, where I feel the market is confused, I think all of us do the same thing. We go back to the same playbook. Let's go back to technical analysis. And so with the rotation here, this is your official breakout on the technology sector. You're 5 days into the price movement. And I do think this is normal given the fact that, typically markets will move 5, 7 days, 7, 10 days, but it doesn't start to move into that 12, 13, 14, 15 days typically. And so when you're looking at this type of price movement, you're up into the upper end of the range from a historical perspective. Look at just the short-term price action here, and this is why you kind of ask the question. From this support level to that resistance level before you consolidated, and mind you, this is 2-3 days after a breakout here, you're 1, 2, 3, 4, 5 days, and then you consolidate before you hit it again. You hit it again, 1, 2, 3, 4, 5, 6, 7 days before you consolidate. 1, 2, 3, 4, 5, 6 days before what? And so yes, it's an appropriate question given the fact that we're kind of in that 5th day of the actual official breakout here. When you come into your RSI, and I'm sorry to go into so much detail, but
This is what I was looking for. Yeah,
I like giving detail when it comes to me reading certain technical parameters, right? And sometimes it's overkill and review for some of the pros out there, and I get that, but just bear with me. When you're looking at the range up here, you're up into the historical ranges from your price response, but you're also up into the historical ranges from an RSI perspective as well. So the official answer is yes. But ask yourself a question if you're a trader. Are you going to chase that candle, or are you going to chase that candle?
Give me tech.
Yeah, and so that's why it's a little difficult right now. Is you're looking at an area of the market with technology here. Let me highlight that, and specifically with discretionary here. When you're talking about those growth areas of the market, you're looking at really discretionary, you're looking at technology. Comms has a mixed bag. Comms gets tied to the growth areas because of certain names that we have historically associated to growth, such as the top of comms, Facebook and Google. But when and those gamers, right, the Activisions of the world and so on and so forth. But it also has a lot of your other type of AT&Ts and Verizon and Disney and those value type plays. And so comms gets associated a little bit in both, but primarily it gets tied to the growth. But when you're looking at the growth, and this is where the money is coming in right now, the difficult nature of the market this specific week is you're looking at bearish retracements right now in the cyclical areas of the market. Those need time to flush out those charts. When you're looking at the discretionary and the technology areas, which are the growth areas, you do have a slight overextended scenario with technology, but momentum is picking up there and should continue. You're just in that bar by bar scenario, which does lead to a little bit more trade management, short-term trades instead of new type swing trades. In discretionary, you're 5 days into a breakout and you're smack dab hitting the all-time high resistance. I'll tell you, for me anyways, I need time on discretionary. I need 3-4 days. Either, you know what I would love on discretionary? You know how I love to paint the future a little bit, Tim, when I'm kind of looking here. How would you like this scenario? 1, 2, doji 3, right here at the 175, 176 area as that 90 MA catches up. Flag-based pattern.
And it's perfect.
Right? Or a little bit of a deeper to 174 maybe. Maybe down, little doji at 174.
As long as you don't clip 174 in the moving averages.
Oh, no, you can't go under 174.
Yeah.
My theory here, right, when I'm theory crafting a little bit, my theory here is not 172 because that's garbage. But you give a retracement between the 174 and 176 level, that's going to be seen as a very popular buy the dip. It just needs time to flush out. That's it. Or you high base, consolidate, play some defense against that 180 breakout channel, and you get ready to rock and roll there. It's difficult today. It gets, at least for me, it gets a little bit more clear once the pattern starts to develop. And so the pattern is in a development mode right now as you're slightly overextended in discretionary. Once again, coming back to technology a little bit, same 5 days, but you had better strength coming in. You already broke out of that all-time high. You got momentum. So your bar by bar in tech is you're a little bit overextended. Discretionary, you're in a wait and see mode from that perspective. And so I just wanted to take a little bit of time. As I know it was a simple question of is it overextended? But you know me, I like to give detail.
Well, an important question, and I'm glad you went through that detail to answer it because it gives me a lot of context there. And it's one of the questions I had coming into this week is where we were with that. But on that discretionary chart as well, obviously, I would love it to get happy. Give it, any amount of time through this week, obviously. Let it 1, 2, 3, 4 bars come back through the holiday weekend, set me up. That would be a wonderful anticipation of a new pattern. Yeah.
And quite frankly, when you're looking at the indexes, I mean, it certainly paints the picture. There's no doubt about what's happening in the marketplace. But when you go scanning and you go hunting, it exasperates the situation quite dramatically. You're seeing a little bit more price movement in the underneath the markets than you are in the actual indexes right now.
Anything else on those indexes you want to highlight before we go into sectors? Because now that we're starting to dig into them a little bit, I'd love to get Coach Gino's thoughts on the broad sectors.
No, I think I've talked enough about a doji in the S&P so far.
That's right. I will mention one note on the Russell 2000 I found interesting. GameStop was removed from the Russell 2000, moved into the Russell 1000. So it actually does not price based on this chart. AMC stayed in there. So I thought that was a rebalancing note.
That's interesting.
Grabbed my attention a little bit there, Gino. Yeah.
GameStop too big of a company.
Yeah, it is. It got too big. It's no longer a small cap, so they had to move it. They had to adjust it.
Not from a revenue perspective.
just
Wait a second. Hold on. The companies in the Russell 2000 have higher revenue. Just throwing that out there.
Sure. Yeah.
A little dose of reality, guys.
They did move it even though based on market cap.
They don't have a choice. They have to.
You have to at this point, right? And it's the quarter rebalancing, so it happens. Gino, let's get you right in here and let's talk sectors. Obviously, over the weekend, you build our newsletter for our pro members over at Tackle Trading.
Yeah.
Appreciate all the work that you do on that for our team Tackle out there. I know they're grateful for it as well. Matt's already kind of started into the sector conversation, but why don't you continue it and give us your thoughts on some of these broad sectors, what's going on in, cyclicals, what's going on in growth, what's going on in defensive. Where do you want to start there, Gino?
Yeah, so a lot of interesting things, but ditto what Matt said. The key words here, Tim, are sector rotation. That's what it's about. And, we break down the markets from top down on the newsletter. We start with news moving events, like our market moving events with the news past and future. We update you on that. And that's important to kind of keep up with something going on. But now on the newsletter, if you follow it week by week, you find the momentum in there in the sector rotation. And that's very important that you do that every week. It's not like, oh, this week tech's good. Oh, next week financials is good. Yeah, you're going to have your leaders and laggards in different sectors every week and every day. But it's all about where is the big money shifting. And it's really important as far as a market stance. You keep an eye on the big sectors. Tech is the big name, right? Tech is like 26, 27% of the market cap. So it's exactly 27.2% of the market cap of the S&P. And that's where the money shifted into. We've been talking about that for the last few weeks now. But as you look at the newsletter versus last week we had a lot of downgrades. We definitely saw money coming out of financials, industrials, and I would just rather say the cyclical sectors, industrials, financials, materials, and energy. They were downgraded quite a bit, but you'll notice we didn't put them as bearish. Once again, everything except utilities and staples is holding their bullish trend. That's based on a long-term channel. It's definitely an uptrend long-term still. We're just starting to see some of these sectors bouncing off their lower. And in the newsletter, I talk about the 50-day moving average, which has been tested across a lot of sectors like financials. And we saw some weakness there. We saw some weakness there in those cyclical sectors, what I want to point out, which is our industrials, financials, materials, and energy. Now, that was last week. This week, we had what we call a little bit of a retracement. And a lot of the same kind of sectors, like, you can tell some, especially financials. And that's the one I want to keep my eye on, Tim, is financials right now. Financials, I found something interesting in my research here. Financials, you see that big candle down day right before expiration? That is the day after the FOMC meeting, okay? That's the day after. Now, a lot of movement happened on the FOMC meeting on June 16th and the interest rate talks, and that happens every 6 weeks. Now, since that day, sectors have made big moves, okay? Since June 16th, all the sectors had big moves, and that's where I like to see where the money's going, is on big days like that and following through. Oh, 1 second here.
Yeah, and you mentioned the word retracement, Gino, and obviously that is officially called a bearish retracement because of the lower pivot low. And, Matt has highlighted the candle there. That big drop did kind of change the nature of the pattern and the trend, brought it below moving averages, put in a lower pivot low, and kind of moved it more into a sideways consolidation. Bear retracing back into those MAs now here, Gino. So yeah, anyway, go ahead and continue your thoughts there, sir.
And that what you're showing there, Tim, I'm pretty sure you got the 50-day, 20. You use the same moving average as I do. That's a key area right there on a daily chart. When you look at that, that is what we call a bearish retracement on a daily. But when you look at that, can you switch over to a weekly real quickly? If you look at a weekly, not too shabby still. You know what I mean? Yes, it's a pullback. We're still in a nice support channel there. It's textbook. You can go back and found support off the 34.5 level. That's financials. It's one of the bigger, what we call cyclical sectors, okay? So that's one of the bigger ones of the market. So that's when you got to watch for the cyclicals. Now, since the 16th, check this out. The only sectors that have stayed above their June 16th price are technicals, the infotech, communication, and discretionary. And one other one, healthcare. Now think about it. Since the FOMC meeting, which ones have hit new highs? The growth sectors. So see, there is key events that you have to keep up with. There's key analyzation you have to follow through with. Where's the big money going after they get an outlook of what the feds are doing, right? So it's not a coincidence that none of the other 11 sectors, but the top 4, tech, communication, discretionary, health. Now, health used to be, not Tim, you and I talked about this. Is health, how do you classify it? It used to be considered a defensive or safety, right?
Traditionally, yeah, but it's a unique one in some ways because of the healthcare plans, obviously being more traditional conservative type
and
things, that pay dividends. But then biotech's a little bit more aggressive, so it's got a little bit of a mixed bag. Matt, how would you categorize healthcare as defensive
There's,
or aggressive?
I don't know what conversation I love more, central bank theory or, quite frankly, sector categorization.
Mm-hmm.
For a long time, we categorized both finance. For a long time, the sectors were categorized as aggressive v defensive, right?
Mm-hmm.
And you had 5 aggressive sectors, you had 4 defensive sectors, and this is before we recategorized as, before we had real estate and before we had communications. And finance and specifically healthcare were both labeled as defensive sectors because traditionally they are extremely defensive sectors. Finance, I felt, changed the dynamic of that in the early 2000s, quite frankly, when you got rid of Glass-Steagall in the late 90s and you started reducing the regulatory measures that would not allow the banks to both be lending banks and investing banks. And so all of a sudden, finance went through this amazing growth stage. And then, in the 2008 type crisis, where defensive sectors typically do a little better than aggressive sectors, what was the worst performing sector in 2008? Well, that's finance, because from 2002 to 2007, the market treated it like the number one growth sector, which means it got hammered. And so finance, in my opinion, stopped being a defensive sector in the 2000s, given the fact that it started trading more in line with the aggressive approach to the market. Healthcare, I feel, kind of went through the same thing following Obamacare in 2010. And then all of a sudden, the market started treating healthcare vastly different, and healthcare started being treated more like, from a price perspective, more like an aggressive sector. And so in a lot of sectors, you have a combination of some defensive, some aggressive. But I feel like we've went through this evolution. And again, the market's still going to categorize aggressive v defensive. But I personally feel like we do have 3 categorizations of sectors. You have your aggressive sectors, which you could do categorize as growth. That's discretionary. That's, for the most part, comms, and then technology. Then you have your cyclical areas of the market that are very economically sensitive, and that would be your financial areas of the market, your industrial, energy, and I'm missing one off the top of my head. So you got, basic materials.
Basic materials. Mm-hmm.
And then you have your defensive areas of the market, and the defensive areas of the market, in my opinion, are staples, utilities, and real estate. Healthcare is that weird one where it kind of beats to its own drum. It's got some cyclical nature to it, but it also has some growth nature to it. And if you actually look at the individual components, there's some value. It's really that one sector that does not fit one of those categorizations.
Exactly. Yeah, that's a good point, Matt, because we look at the 11 sectors, but like healthcare, if you break it down to biotech, there's some very volatile growth stocks.
Oh, some of the most aggressive components in the entire market are in healthcare.
Yeah, and then you get the healthcare plans, you get the hospitals, equipment, all that stuff. There's some financial backed stuff in there too. Yeah, that's what I call a hybrid of healthcare. Is like, well, I don't know if I want to be in safety, or I don't know if I want to be in growth. Well, you know what? Maybe look at healthcare because it's got a little bit of defensive and growth in it. It's like your hybrid.
It is a hybrid, I love that word because it's got some of your most aggressive components.
Well, another one I think,
and it has some of your most defensive. Yeah, go ahead.
Think about this as hybrid, because real estate, it could be cyclical or defensive depending on the real estate market, right? It could be its own commodity sometimes, but
real estate itself, I would agree with that. But the REITs in the real estate sector are pretty defensive with the dividends.
It's a dividend.
But ever since the 5G thing and these, American Tower and Crown Castle, they're buying up the property now. They're becoming they're becoming not just a REIT. They're like the high flying. You better jump into these. These are like almost growth stocks.
But I think you can find little subtle ones like that are like shed the sector designation within any sector, right? Think about consumer staples. Beyond Meat is a consumer staple. So there are individual components that are going to buck the trend in the sector.
Again, it definitely was a huge growth stock. You know what else is interesting?
I just want to make one quick point on real estate here. I don't think we changed the categorization of real estate simply because real estate companies are taking advantage of the volatility within the real estate space. We would criticize them if they weren't doing that. They're doing their job is what they're doing. So no, unless that dividend analysis changes in real estate, this will and should be considered a defensive area of the market.
Yeah, definitely. And what's interesting is, again, back to the sector rotation, is following the big money is what we're doing on sector rotation, is what sectors are outperforming. Where's the money going? Where's the volume going? Where's the trading going? And where's it coming out of? Finding where that's like, help us jump on the right trend. But we don't have time for it, and hardly anybody does. But if you really want to break it down and nail it, because we had a question in there like, what do you think of communications? You really still have to, once you find a sector that's definitely out, you still have to find the outperformers in there and where's the strength. But it comes down to industries. And we're not going to go into all 164 industries on the newsletter, because that would just take forever to can you imagine our meeting? Hey, how do you rank biotech? It would take us forever. But you do need time to look through like biotech, transportation, different retail ETFs. But you got to find, it gets down to the industries.
Mm-hmm. I don't mind digging into the industries. I think they're a lot of fun to kind of start looking at those components. In fact, we're seeing solar heat up here today.
Exactly. That's what I was talking about. Yeah.
Sector
solar
rankings are going to be real important. And like you're talking about here, Gino, obviously at the first bit of the segment here, you were describing how some of our discretionary type areas of the market are improving. There's some of the higher ranking ones. Our tech is up at the 20-yard marker, our top rated sectors, and those have been the strong performers. Some of the cyclical areas, Matt, we still have bullish rankings on them. I'm glad Gino did highlight, some of the weekly charts as well, because even though they have weakened on the daily, it's not like their long-term trends are completely shot, just short-term weakness. Anything else you want to highlight on rankings here, Matt, or anything within the sectors?
Nope.
All right. Sounds good. Gino, what about you? Any final thoughts on sectors while you're going through them?
I like what you pointed out too, like a real highlight. I want to highlight a couple things Matt said, because he kind of emphasized what I was going to say is, number one, sector rotation. That's what we've been emphasizing, is following the key sectors, not one particular. Mm-hmm. We haven't ranked on the gridiron the biggest sectors to smallest. And of course, tech's up there. We watch that heavily. And then we go from screening in there. But the thing is sector rotation. And I even noted in the newsletter, which Matt was talking about, is, are they overextended? Yes, some of these will pull back, but as long as the trend's bullish, you stay with it. So are they overextended? They might be. How do you know if they're overextended? I did an example in the newsletter on the video where, we're outside the Bollinger on a couple of these industries. Some of them, really high up. Mm-hmm. For example, like when Nike broke out, of course it's bullish, but of course it's probably going to have a pullback. That's what happens, but it's still bullish. So, you're not going to see a small pullback reflected in a real bullish gridiron sector here. You're going to see, whether it's bullish or bearish, period. So it's very, very cut and dry. We don't want to dissect it too much. But so could we get a pullback? Right, definitely. But we see the money staying there in those bullish sectors.
Appreciate your thoughts on all those sectors there, Gino. Let's move into commodities here next. Let's bring Coach Mark back in. Commodity roundup here today, Marky, starting with crude light, and work us through whatever commodities are grabbing your attention. What are you seeing here in the biggest commodity in the world, crude light, as we're up, near a resistance zone, kind of hesitating here today. It is down. Energy is down on the day as well, but still riding the lightning on the 9 EMA mark. What are you seeing here in the chart?
It's an expected pullback.
Can't hear you, bro.
Excuse me, my mic was up. An expected pullback. I talked about this in the commodities report this Friday. In commodities, if you go back and study every commodity chart for the last 10 years, which I have, you will find a massive percentage of times, like staggeringly overwhelming, the data is, that when you have 3-4 week stretches where it jumps, that you see a period of consolidation or a retracement. It's the natural order of commodities. I know it feels sometimes in a trend where things can just go up, and sometimes, and long term they can have really, really powerful stretches. But if you for example, just look at copper for the last 15 months. you will find that after these 3-4 week stretches where it goes up, trades sideways or pulls back. It's just normal price action in commodities. And so whenever you, like with crude oil, get a period of time where you have that really nice run, that really nice stretch, a period of consolidation or a pullback is just expected. Doesn't mean that crude won't continue up the chart in the weeks and months to come. It just means it's just normal price action. So a little stalling here, especially since you're coming into a known resistance area, is to be expected. And I went into this deep dive and the analysis of it even deeper in the commodities report this weekend. But price action isn't really surprising.
Yeah. Well, crude light obviously hitting its head up here. It doesn't surprise me that it's hesitating a little bit, Matt. There was a drone strike over the weekend in Syria and Iraq. I don't know how much that is, impacting the price of crude oil here, but it did hit the headlines. What you read on the chart, the news, anything that's grabbing your attention on crude light, Matt?
Yeah, technically, typically when you see increasing volatility in the Middle East, you typically, not all the time, but you typically do see a bullish response in crude oil. A little concerning that crude did not respond to that from a price perspective, but you're coming into major resistance right there at about the 75 to 76 level. You can see it very clearly when you look at that weekly chart. Little double top action over here in 2018, seeing that double top there right at 75, ding 75 as well. You got to wake up there at 76, 77, but it's really kind of that 75 level. And Coach Mark's accurate on that. Commodities typically do run and consolidate. And so when you're looking at crude oil, it wouldn't surprise I don't think it would surprise any trader to see some consolidation as you fight up against this very, very, very strong 75 handle.
Yeah, I think it probably would be a healthy thing for crude light, quite frankly, to kind of hang out a little bit, consolidate, and test some of those resistance points.
Yeah, I mean, write some covered calls, do some cash flow, let it consolidate, and if it ever breaks 75, then you're looking for some action.
Agree. All right, let's keep flashing through commodities here. Gold next, a little doji in a little tight range that's developing down here inside that little box map between 1760 and 1800. Got all kinds of problems in the chart. There's no question about that. It needs time and help to kind of work through those things to give us a better or a different pattern. Any read you got here on gold?
I like the I'm doing better than this, but I'm not near doing better than that, right?
Yeah. What are you doing better than today?
Well, not me. I'm straight up doji with the market. Like that's me. I got some fire, and I got some cold right now. I got a mixture of both, but I am doji at the surface. Gold is doing much better in my estimation than the chart we're seeing in copper. Right.
I agree.
You're looking at a scenario in copper where this has to be seen as a bearish retracement at this point. And you're probably looking a little bit lower than that as a potential price threshold that you're willing to get back in. Maybe that's 4, maybe that's the previous pivot here at about 410, but you got to see this as a bearish retracement that has a little bit of weakness in it. Gold, you certainly don't have this as a bearish retracement. You have this as volatility trying to figure it out. Right, trying to figure out where it wants to go next. So I do think the chart's doing better than, say, the copper chart, which I do have a slightly bearish bias on copper. Personally, in the short term, the backdrop of the long term, bullish. That's when you're in that positive 40 type ranking environment. But it's certainly not doing as good as the pounding of the 200-day moving average against the backdrop of the $2,500 price response on palladium. And so you're doing better than copper chart. You're not doing as good as the price response and the momentum happening here in palladium. Gold's in the middle zone there, which means it needs more time.
If you want to look at an interesting chart today, I didn't talk to you about this one, but I want you to take a peek at it real quick. Put in /LBS, because copper obviously is in those growth type of commodities. People use it for construction. LBS, random length lumber futures for May. Hanging out, still holding up there. It's interesting looking at that chart. Copper, the week, and go back to copper because I want to highlight this. These metals, they've rolled over in a different way. Some of the areas of the commodity markets are still holding up strong. Copper is not one of them. That is an ugly bearish retracement.
Remember, and again, a lot of times we tie all commodities together, right? We just have a tendency to do that. We think, oh, commodities, they're all going to do the same thing. It's not true. Remember the catalyst for precious metals. Everybody was thinking it was the central bank. It wasn't. China went hard trying to attack the precious metals by increasing the supply to their manufacturers, by trying to stop the inflationary pressure there. We didn't see that news on lumber. We didn't see that news anywhere else.
Yeah.
It was specifically on precious metals. And so when you're looking at that, what's been weakest? Gold, platinum, palladium, copper. It wasn't lumber. It wasn't food. It wasn't crude. It was specifically to the metals. So obviously they're going to have a little bit more pressure than the rest of the commodities. I got, again, coming to the entire precious metals, you're looking at copper in a bearish retracement. Gold's trying to figure out what it wants to do. There's no trade here, though.
No.
This longer term investors never care. We always say that because they never change. It's the short term price action that needs to get flushed out a little bit.
Yep, I agree with that. Now let's keep moving through the markets here. Give me the dollar next, then Bitcoin, and then I got a couple of items from individual companies I want to highlight here. The dollar really just kind of digesting the price rally that it put in a couple of weeks ago here, Matt. Obviously, we do have a higher pivot low off of a support bounce, but that was news driven, and we've really seen nothing out of the currency market since then. Anything in these dollar charts that grab your attention?
No, in the intermediate to longer term, I got a very neutral view on the dollar. In the short term, I do have a slightly bullish ranking on the dollar, just given the fact that technically you absolutely have to see this as a higher low, because it is. You double dipped and double tested that 24/6 handle, and it passed the test both times. So you got to be looking at that as a bullish retracement, bull flag pattern, higher level of support. Where it goes in the short term, honestly, figure it out. The currency market's been crazy lately. Looking at the weekly chart, you're seeing a double bottom on the weekly chart, little bit of a lower level of resistance. So mixed data here on the weekly chart. It's guys, I'm not shy about saying this. It's a tough read technically.
Mm-hmm.
Like, it's just a tough read technically. Easier read in the market than in the currency. It's an easier read in every other market for me, anyways, than the currency market.
How's Bitcoin's read technically? Are you still seeing this as tough as it has been over the last couple of weeks?
I still got a lot of hot takes. Let me put it like this. I still got the market doing a million different hot takes when it hasn't even removed the box yet.
Mm-hmm.
It's still in the box.
Dude, it's hot take Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday in Bitcoin. So
and it's getting silly.
Yeah.
The hot takes are getting kind of silly because they're chasing every day's price action, and that they don't even have an opinion. They're just chasing the daily price action. It's just in the box. It's wide range neutrality.
Mm-hmm. Yeah, I'm with you. All right, guys, that's it I've got from market analysis. We're going to move right into stock talk here for a couple of different items in the news from companies that grab my attention here. And then we're going to get some final thoughts. Starting the week here on a Monday, getting you guys set up for your trading week. Let's start with a biotech company that I actually have never traded, but it's a good reminder as to why small biotech companies should probably be completely avoided by traders. NTLA is up 55% after a huge announcement that they had some gene editing treatment using CRISPR technology. Very cool human interest story. But Matt, biotech firms of this size, this is a very small cap one. I avoid them completely. I still follow the old rule I was taught: avoid these type of companies. What about you? Just a reminder to me that news can drive them like crazy.
Traders always want an edge. There's no edge on random news stories.
Yeah, I agree with that. Tesla is virtually recalling 300,000 cars. The market did not adjust to that news at all. In fact, I even bring this one up just because I kind of like the technical condition developing here, Matt. Doesn't matter really what is in the news here lately. Tesla's starting to come back up off support. It broke out recently. Now we got a little high base developing. How do you read this chart here?
It's definitely one of those moments in time where you're like, okay, negative news stories should see price depreciation, right? Mm-hmm. Remove the company's name. Negative story should see a negative response in the market, correct?
Mm-hmm. I agree.
Okay. But the interesting dynamic for me with Tesla is, first of all, I like the $700 trigger. We can talk about that technically here in a second. But you have a negative news story in Tesla, but you have a lot of positive things happening in the areas of the market that Tesla is king, queen in the country of. And that's the ARC Innovation Fund. That's disruptive innovation. That's the growth areas of the market. And what's getting hot? Those areas. And so you have this, with Tesla, you have this interesting negative news story, but the backdrop of what's happening in growth is fairly strong. Obviously, a little stronger, keeping Tesla up. Now, when you're looking at Tesla from a technical perspective, this is something Coach Tyler highlighted last week, and we were talking about it in comparison to Apple, right? We were looking at Apple, and we were talking about Apple a couple weeks before, and we were seeing this right shoulder, right? You have that double top right shoulder against the reversal here, and we all love that breakout here, right? We all love that breakout. It's on our reports. We talked about it all the time on the halftime report. Good price appreciation there, right? You got to like that. Coming back to Tesla here, same type of analysis. Tyler was on the show last Wednesday, and he's like, you know what? If you like Apple, you got to like Tesla too. Following day, nice breakout there. And if you miss the breakout, what do we always say? If you miss the breakout,
Wait.
Don't chase it.
Yeah.
Be patient. Wait. It will reestablish a good pattern eventually. And that's what Tesla's doing right now. It's reestablishing the technical pattern. And so you have a nice breakout here, quick appreciation, and you might like to say, oh man, that's only 2 days into the breakout. You're right, but it's 70 points. It's a 10% price movement there. It's a little bit range up there as well. But look at the consolidation here. And what I like about this potential trigger is you are establishing a very clean trigger right there at that 700 mark. Clearly established a resistance point over here, tested on the overnight. On the intraday here today, you test that as well. And so in my opinion, with Tesla, specifically with Tesla, it's a very simple analysis. If you miss that breakout there, you wait for the pattern to reestablish. The $700 price threshold is being treated as a resistance from an intraday perspective. Simple. You wait for the breakout.
Mm-hmm. Yeah. Patience and waiting is definitely a good thing for most pattern development. If it's not there yet, you got to wait for it to get there and then trigger and set you up. I think a $700 breakock, though, Matt, is something you've got to be excited about if you're a directional trader.
Well,
this stock's been
it's either going to do it or not this week.
Yeah.
So they're saying it like, oh man, patience, you go wait 3 weeks. No, it's either going to break or not this week.
Yeah. And then there's only one other company that I wanted to talk about from a news perspective here today, and that is Comcast, CMCSA. Maddie, did you get a chance to go see F9 over the weekend, the Fast and the Furious recent edition in one of the theaters?
You know, I love the Fast and Furious franchise. Mm-hmm. Like, legitimately love it. Like, geek out all the time. I haven't been able to get that excited. And me and Coach Frank, we both love the Fast 9. We geek out on it on Friday during the scouting report meeting, we talked about it for like 30 minutes. Mm-hmm. I ever since Paul Walker died, I need time. I can't see it on opening day.
You got to
opening week. I have to. I don't know why.
Well, I'll tell you who did go, and that's a lot of young men, actually.
I guarantee it.
I saw the demographic breakdown. 60% of the tickets were sold to men under the age of 25, and they
love it for the same reasons I do.
To the theaters, man. $70 million at the box office is the biggest weekend of any movie since the pandemic struck last March. Obviously, a really good sign for the industry in that regard. Still lower than their previous levels that they would put in, obviously.
Wait till those Chinese numbers, bro.
Dude, the international numbers are going to be off the charts.
Wait for those international numbers. Fast 9's a massive franchise internationally, too.
Well, they're already starting to get some international numbers. 400 million total so far through the release as well. So, yeah, it's an exciting development for moviegoers, no doubt about that. I mean,
I'll definitely check it out, but I'm not a go to the movie anymore. No.
No, I'm with you. I'm with you. What app does Comcast run? We can probably get it streaming in a month, so it is what it is.
Was Hobbs and Shaw part of that? Was that part of the Fast 9?
I don't think Hobbs and Shaw.
I'm offended.
What is Hobbs and Shaw?
You don't know what Hobbs and Shaw is? Oh, Hobbs and Shaw is the one they did
The Rock and
in the year they didn't release an official Fast 9. So you have Fast 8, and then you have Hobbs and Shaw, which doesn't have the family, bro. It just doesn't have the family.
What do you mean? And the Hawaiian family?
No, it doesn't have
the
Vin
whole
Diesel's,
cast.
Vin Diesel, Brazil. No, it doesn't have the family.
Dude, Vin Diesel.
And Ohana. What are you talking about? Okay,
that dude still
We're gonna talk
can
about
sell
this
a
after
ticket.
the show.
Yeah, for sure.
This will continue.
Yeah, absolutely.
Yeah.
All right, guys, that's it I've got from the news perspective. Anything else you guys wanted to highlight?
I
saw this story, yeah.
I know, I just had to. So Boeing is down on what news?
Oh, basically they're being pushed to 2023, which was already the expectation from what I read.
Yes. Okay. No new news.
That's right. Yeah.
No new news. Okay, it's the same news. So the CEO of Delta comes out last week and says, "Hey guys, we're looking to get certified in the fall of 2023." All right. Market goes up. We're good. Today, the regulatory bodies. Delta looks to officially get the 777 plane in the fall of 2023. Mark's like, what?
Yeah.
Guys, the CEO told us that last week.
This is what we knew already. So
told us last week.
Yeah, I guess headlines
not
can move
new
stuff.
news.
Not new news, but it is down. It actually is dragging the Dow a little bit here today. So
and that's what really is transpiring here is just the cyclical areas we're seeing. Guys, what you're seeing in Boeing is not a whole lot of different what you're seeing in a lot of the stocks that are in finance, industrials, basic, not so much basic materials, but those cyclical areas of the market.
Absolutely. All right, guys, that's it here for our analysis today. We're going to now start moving into final thoughts, give you guys some insight for the way we're going to be approaching the rest of the week here. Also some programming notes to tackle trading we'll get from Mark in a minute. But Matt, let's just lead off right with you here. Final thoughts for the team out there.
Final thoughts very similar to this. Remember, we moved the huddle to a post-market recap podcast starting this week. So definitely download the huddle later on today. Should be released by it's the first day we're doing it. Maybe give us 10, 15 minutes, but should be released by about 4:30 Eastern Standard Time today. And Coach Mark is going to be the voice of the huddle as he gets ready for his first trading lab this week. And then Coach Emily is going to be the voice of the huddle next week, followed by Coach Tyler the week after. And then yours, not yours truly, but Tim, the host of the huddle, will be back as that amazing voice in 3 weeks' time from here. But definitely get excited for the huddle. We also have a Trading Justice podcast being released later on this evening. Typically, that gets released somewhere between 8 and 9 p.m. Eastern Standard Time for you nightly listeners. But also, we know you guys love to download and listen to that on your commute to work, typically on Tuesday morning as well. So that will be released later on tonight as well. And then remember, Trading Labs officially kicks off this week. So get excited for Coach. I believe Emily is tonight. Coach Tyler's on Wednesday. Emily 7 p.m. Eastern Standard Time tonight. Coach Tyler is during the actual trading day on Wednesday, and then Coach Mark is Thursday night as well, 7 p.m. Eastern Standard Time. So get excited for Trading Labs. And if you don't have access to Trading Labs, you can definitely email team@tackletrading.com and ask Coach Mark, any question you guys need. He'll take care of you. Or you can go to the store page at tackletrading.com.
Absolutely. And I did drop the link to that store page. You can go directly there. There's a link for a 15-day trial for either one lab or the bundle of all the labs, and they are starting this week. So make sure that you do not miss that, guys. You're going to want to be a part of that. Mark, final thoughts from you, sir.
Oh my gosh. I share all of my thoughts on the market on Sunday night. I'm sure I'll have new thoughts on Tuesday's Nature Markets. Check out the Sunday night prep class recording. It's already up and posted. But listen, I got a ton of stuff going on at Tackle Trading today. We have a podcast in which we are going to be reviewing our yearly predictions. It's going to be super fun. Emily, myself, Matt, and Tim, we made some predictions at the start of the year. Predictions is not exactly an exact science, but it should be fun reviewing those, and we'll give some thoughts about what we think is going to happen the rest of the year. So it's going to be a super, super fun podcast. We got Step System Mastermind Group tonight at 8:30 Eastern. We also have Coach Emily doing her first trading lab tonight. In addition, Coach Frank is doing onboarding for new members at 7 p.m. Eastern here on Tackle Trading YouTube. Needless to say, we have a ton going on today at Tackle Trading. And I'm getting out lots of information on Trading Labs. I've sent out a lot of emails. If for some reason you have not gotten an email from me today, a lot of you probably, most of you have. If you haven't, just nudge me at Team of Tackle Trading. I don't want to forget anyone with information that we're sending out. So just email me at Team of Tackle Trading, and I'll make sure I get you all of the relevant information for Trading Labs this week. Super excited. So lots going on today on a busy Monday.
Yep, Maddie.
Every time he talks, the only thing I want is to see his face.
I want to see this beard. Everybody at Team
He won't
Tackle,
even show us.
he wouldn't even show his brothers this morning. We're like egging him on. Come on, Marky.
I haven't seen him without a beard since he was 18.
Oh, come on.
Not happening. Listen. When your 10-year-old daughter comes home from her mother's house, looks at you, and she loves me unconditionally. My daughter loves me unconditionally. Looks at me and she says, then you know.
That does tell you all you need to know when the daughter tells you that. It's true.
Anybody who's ever had kids, though, with a beard and shaved it, you've probably had that response. I remember my kid, I even just shaved my goatee when she was really little, Madeline, and she like cowered into the corner in a fetal position. She's like, Dad, I don't like it.
Guys,
my dad.
So you guys remember when we did No Shave November last year? Okay. I shaved in a handlebar mustache, kept it for like 2 days. I don't think my daughter would even look at me, but it was a beautiful thing.
Dude, I remember. I remember the comments. Absolutely.
I might bring the handlebar to the halftime report.
Yeah, dude, I would like to see that again. Maybe we can get Mark to share his video at some point here. We'll see what it looks like as you grow it back.
If Mark shares his video at some point this week, I will rock a handlebar mustache as I give analysis on the stock market. I promise you.
That's nice.
I will.
You could literally give me $15,000 and I wouldn't. Maybe for 25, but I wouldn't do it for 15. I wouldn't.
Tackle Trading. I'm going to find his number this week.
Oh, jeez. I'm going to send some paparazzi to Coach Mark's
house. I'm going to find
his
picture. I'm going to find whatever he needs. I'm so curious. This is like a journey.
That paparazzi, if it is a man, he will get beat down. If it's a woman, she'll probably get the picture because, that's how, but
that's how you roll.
What if it's your mom? I'll send Mom over. She'll snap a picture for me.
She would.
I can see it right now.
I don't trust. Okay. Anyways, this conversation.
He doesn't like it at all. All right, guys, that's our show here on a Monday. Thanks for being a part of it and joining us. As always, subscribe, click that bell, come back and join us each and every day. The markets go live. We go live 12:30 p.m. Eastern Standard Time. If you have any questions about programming notes, buzz Mark and email team@tackletrading.com. And get enrolled in those trading labs. I did put the link in the chat. You don't want to miss those. They're getting started this week. So make sure you enroll in trading labs. We're out for today, guys. We'll see you back here tomorrow. Same time, same station.